Oh, there's no need for that. None. None. Okay, I am live. Why are you crying like that? Morning, Zephin. What's up, buddy? View your channel. 1.8. Huh. I'm going to turn that down. Good morning. Hey, Zeph. I miss you whenever you're not here, Zephin. Morning, Chris. Morning, Joe. Morning, John. Joe, was it a one-off on that 737? Certainly sounds like it. Or are we looking for, you're my resident aerospace dude. Sounds like it was just that one plane. That's exactly what it sounds like. But it does sound like it's that one plane. So kind of goes back to any reaction, maybe an overreaction. By the way, just starting out, what you see on the screen is N2 Backpacking, Steve bird shooter Goodrich. He's not a bird shooter. He's not a hunter. That's your trail name. And his trail name was given to him when he was 25. He hiked the Appalachian Trail. This is his 30th anniversary of hiking the Appalachian Trail. He and I are good friends. He does a backpacking podcast that I am on often. And we just did news review of 2023, so you can hear me on that. I'll put that in the newsletter. This was an interesting one. This BVH Blue Green Vacations Holdings. Found this while geeking out and seeking alpha. But I don't have that much to really go over today. I'm looking at my notes. A couple of things. Earnings this week. We do have JP Morgan. We have United Health Group. We've got Bank of America, Wells Fargo, Citigroup, BlackRock. Ironically, BlackRock on Friday with the ETF coming up. Wow. Ooh, GE Healthcare is doing some acquiring. What's GEHC? That's one that I've been saying for a while. This one may get put into the core portfolio. I've liked this one. I mean, even though it slid here from, $80, $85 down to 66, buying and holding this one over 12 months, because it was just hey, Mike, it was just an IPO 12 months ago. I got to put myself on Do Not Disturb. Do Not Disturb. Boeing's down 7%. I'm telling you, it's at 231 right now. It's bouncing back. I like all those, Zephin. Kudos, Chris. I didn't have the balls to hang on to those. But by the way, just so everyone's aware, I thought Friday's or this weekend's paid newsletter was a really good one. I thought it came together nicely after I wrote it. And it's part one of probably a 3 or 4 part series. Oh, that's even worse than I thought, Joe. I was thinking that this was just a one-off. I didn't think. Oof. Here's the thing, Zephin, and we can I'll look up SOFI here. It's buy from Seeking Alpha Analyst, hold Wall Street, and the quant says hold. And by the way, here's if you are a Seeking Alpha premium holder, somebody asked me in the comments about why I like the quant. It's hard to. I'm still getting used to this quant, but from what I have seen, the quant has been very good at identifying some of the stocks that you may, I don't want to say it's a boomer quant because it does identify growth stuff, but you can see how the sell 12/14/2022. Let's just go over to SOFI. I'm going to look at a weekly. And this is, let's see, it was 12, changed over 11:30. Let's look at how it did in the month of 2022. We'll look at a monthly. And so this is November 2022. It closed out at 483. The next month closed out at 461. So that's where it went. It said sell. You would have been better off selling and buying back in. Hey, Nevin. Hey, Zephin, that door blew off of a plane that was flying at 10,000 feet. And so I kind of have it in my notes. Let me see what I said. With the plane door being sucked off, looks like a manufacturing defect for this particular plane, according to experts, and not a widespread problem. I say buy the dip, but it sounds like Joe may say no. I did put in, this is a Boeing and new explosive MAX and stock crisis. This guy says buy the dip as well. Conclusion, Boeing stock got riskier, but long-term buying opportunity can present itself. I do agree with him. I think long-term, I think Boeing just comes back to, it's just, I hate these with Jesus, Effin, you want me to do a whole portfolio analysis? Yeah, well, let's look at SOFI. Don't you have TrendSpider? Look, SOFI's using the 200-day. I mean, that's at 810. Pre-market, you're at 823. I mean, it's just kind of floundering. You do have a gap above at $9. The problem that you have with SOFI is, God, and I hope, let me see. Why am I not blocking? Hold on. Safari settings. We're going to block all this stuff. Okay. We're just going to put all those in. There we go. Let's see what happens. SOFI got that downgrade, and it was just before, where they said it was a $6.50 stock. Average target price still stays above $9. It's just not closer to 10, which is where I thought it was going to be. But it's expensive, Zephin. 109 forward PE. That's the only problem. But you've got retail on your side. You can see November, this dude's buying at 669. Larry. Okay, let me look at Zephin's. You know what, Zephin? I'm going to do Market Scanner. If I don't get to yours, remind me. I'm going to try and do it after I do these scans. But honestly, I don't have a ton to go over. I have more social requests than anything. Effers are coming out of the woodworks. I have Trading Desk. I have Crowd and Melly. I have Yeti. I have EC, which I don't even know what it is. I have Zim. I have MLGO. And Brandon wants me to check out some wacky, he's on a space kick, SIDU, woman founder, veteran Navy pilot. Verizon, I've got Couple of terms I'd like you to hear explain more. Confirmation was the biggest one in terms of what you're looking at. Button hood was the other. I took care of those. So I'll mention that. Yes, would love for you to look at Crocs. So those are the ones I'm looking at. No cross-ups in the core portfolio. Let's look at the brokerage holdings. Let's look at covered calls. This, I think, was written before even that gap down on that downgrade. UCO. Huh. Oh yeah, it's Jim Cramer at the front desk of J.P. Morgan. Did Jim Cramer show up in the Jeffrey Epstein papers? I wonder. I mean, let's be honest. I think, Stephen Hawking. Is that not the funniest thing? He liked small people. He got off on small people doing mathematical problems. That was his request. Here's SOFI. So Zephin, here's, by the way, while I'm looking at it, I think I drew this before it got that. Oh, we're playing ball. Before it got that downgrade. We could be using the 200-day as, and you are right now, you're using that as support. I would say have your stop at around 811 or so, because if we break that, then you're looking at probably getting down into this neighborhood of 7s, and it's just not worth it. The MACD is still falling. That's the danger is, did you buy too soon? Because the MACD is just, it's under the oscillator, and the strike line's nowhere near it. Now the RSI is at 33. Buyers have to show up. So they're showing up because you can see the MACD is kind of, the RSI is kind of just flowing up there. Let's see if any sectors crossed up. You're just in a market, by the way, that's just not. Morning mark. It's eh. And I want to say buy Pfizer. At $29, man, I want to say buy Pfizer, but I'm just not a huge fan. Tractor Supply. Do we get a bounce up after all of this crap that went on? Why? Okay, I got to restart. TrendSpider. Ooh, we got some cross-ups on BITO. Let me log out and log back in. Log out. We'll log back in. Okay, I'll look at C. Zephin's got a bunch for me to look at, and then I'll look at CIEN too. We're on the not owned portion because we have BITO. We have GBTC, and we have Tractor Supply. Tractor Supply is an interesting one. During pandemic, these guys were building stores like there was no tomorrow. You can see this was an $80 stock that ran up to $250. Pandemic. And it's sitting at 218, and they've just, it's not a crazy one. TSCO. Oh, come on. What are you doing? Why'd you freeze? CO. P's 21. Nothing crazy. They have good, good prices on the dog food that I feed the dogs. Insiders are selling at 220. They're putting in their sells. It's trading at 218. I mean, the target price is 219. Your 52-week high is 251. So it's stretched up there. Nothing that I would say is crazy. Okay, so I've got those GBTC. GBTC just keeps going. I mean, at 38. Good Lord. And BITO is up 2%. This one could continue to go. Let's look at the Dow. Fuselage plug. Let's look at the NASDAQ. The news that I saw this morning, Joe, by the way, on that plane is there were warnings. This could be a rebound. PayX. And then let's look at the S&P. And the market is, it's being pulled down. It has been down. I don't trust right now a lot. So, okay, let's say we're going to go to the 4-hour run. Look at PayX. I mean, 118. This is almost textbook, by the way. MACD. Let's look at a weekly real quick so I don't overdo this one. I mean, it's a SaaS company, so you can see it's just kind of capitulating right along that 50-day. Oh, God, I know, Sherry. I know. Okay, let me look at Zephyrs real quick. Where is it? Could you look at Butterfly? I don't even know what the fuck Butterfly is. It's got to be a software. Butterfly Networks has you out today, Zephyr. Loses you 73% versus 84% if you bought and held. You win 24% of the time. So the algorithm isn't great on this. It does save you money, but it still isn't great. Your average win is 15%. So worth looking into. BFLY. More in T-Dog. Yeah. I haven't seen you in here in a while. And good morning, Sherry, by the way. Butterfly, it's not making money, losing $123 million. It's got 73 cents. It doesn't even have a year of cash. So if they're going to make it, they're going to have to. It's medical devices. Wow. What did they do? Let me see. Medical imaging device reduces the cost of real-time and three-dimensional imaging, develops and provides a whole-body portable ultrasound scanner called the IQ device. This may be what I was looking at doing, by the way. Chief Technology Officer was selling at about $1.81. Stock's trading at $1.09. Not really covered heavily. March was the last one at $2.25, and it was neutral. Let's go over here and we'll look at Butterfly. Hold, buy, hold. I would say stay away from it. You could trade it on the chart. I don't think it's a solid. I wouldn't trust it, Zephyr. So Butterfly's out. Lemonade Insurance. I like this one to trade. The problem you have is defaults. The insurance. The catastrophe in Texas where they the cold snap. That's what killed these guys, and they do it based on AI, and it's an insurance kind of thing. The algorithm makes you loses you 51%. Buying and holding loses you 52%. You win 29%. So it's not great. You do have a gap above. You have a gap below. Bye-bye. Let me know. I'll make sweet potato gnocchi. Yay. unpromising dinner. Your boy's a little bit of a chef. But lemonade I'd like to trade. I don't think I'd hold this one, Zephin. It's not, again, they're losing $258 million. They have $333 million of sales. So their price to sales is 3.47, which is high. It's an insurance company. You can buy Berkshire. I mean, if you want a long-term investment in insurance, buy Berkshire. If you want something that's going to explode, this is one. It's based on retail. Average target price is 17. You're trading at 16.55. I mean, most recent downgrade Oppenheimer, they didn't put a price target on it, but in June, Morgan Stanley said $14, and you're trading at 16. Better places to go. Wrecker Path, REKR. I don't even know what this one is. Wrecker Systems. Same thing. The algorithm just doesn't work on this one. You can cut. By the way, if anybody has the TrendSpider, you can. I need to put that thing out with Jason where you can use this performance chart down here and mean changes and things of that sort to actually get a better winning percentage. Your average win on this one though is 26%. So if you can time it right, I mean, look, you're in one of those 26% ones now. You were under the 200-day. You're at 25%. So you're at your average win. Would I get in now? Hell no, I wouldn't get in now. Even though you've got this cross up here, the golden cross, they're losing $41 million. I mean, again, we're not in a situation where higher for longer is going to kill these companies. Because if we start to see the rates come down, we're starting to see a de-inversion. But this one's a tough one. I mean, it's got 69 million shares floated. I'd probably stay away from it. You could trade it. And Path is one that I've traded in the past. Not one that I'd say UiPath. You invest in, you got a huge gap down, looks like the top of the gap. You're retracing back here. This was a 50% gain it just got you out of. This one loses you 61% versus losing 43% buying and holding. You average win is 16%. You win 22% of the time. Now, here's the thing. Look at that MACD. The last time the MACD was down here, you were at 15, and it just took off. If we look at the long term of this one, it's been just a loser. I mean, just a total loser. But it's gaining something back. So if we look at this from they're losing money, $151 million. They've got plenty of cash on hand. There's no devaluation here. It's a software company. So typically, the forward PE is not a concern in a software company at 42. That's not nuts. 52-week high is 26. You're sitting at 22. Average target price is 24, so that's only, 10%, maybe. Most recently, January 4th, William Blair initiated the downgrade in June to $20. Motley Fool has an article why it jumped 25% in December. You can read that one. Everybody's selling at 24 in large amounts. It's not small. So I'd trade that one. It does look like you probably have a decent opportunity. If, and this is a big if this gap isn't to get retraced. I do think that this one right here at 22 provides you some decent support. Yeah, Boeing's back under 230. Let's see, FBCG, that one doesn't trade pre-market, so I'll ignore that. NVIDIA is way up. Palantir is up 1%. SMCI hitting 300 again. Tesla down at 237. Looks like a decent opportunity when we start to get a cross up there. Uber's under 60. I'll be adding to this one. And energy's just taking a dump again. So it's Devon down. Devon's down, back down at 45. I mean, energy's just, Okay. Let's see. We're going to talk about paid newsletter. Let me see something. TrendSpider for some reason is show plans and pricing. Yeah, there's no real. They don't have tiers anymore. I mean, they haven't told me exactly what's going on. Huh. Oh. Okay. Okay, let me look at BABA. Let me just look to see if there's anything crazy on this front page. Look at natural gas. We'll put this in as boil. So a great week comes crashing down. Okay. We're going to close that down. Let's see. Oh, launch date. Ooh. This is good. I'm going to put this in. Apple. Date. And that is going to be February 2nd. Wow. I'm going to be okay. So Apple is selling this for about $3,500. That's a big one. Okay, let's see. Is there something else that I want in here? News-wise, trending news. Boeing's quality issues limits upside from Morgan Stanley. 4 stocks to watch on Monday. Let's see. Boeing, Crocs. This is interesting. I'll put this in. 2 Crocs. Into our first Crocs jumped 9%. Interesting. Brian, welcome back. Brian, you never say let's make some money. What do you think about Union Pacific and Planet Fitness? Union Pacific I like. I think my dad owns Union Pacific. The This is I think he got it from Buffett or Motley Fool. I forget which. Union Pacific algorithm just got you out. Nice 15% gain. You lose 2% on Union Pacific if you use the algorithm, which has 27 positions, so about once, maybe 1.3 times per month. You trade it. Your average win is 4.94, so it's not one that you want to trade. It is one you want to hold, but you are down 5%. I'm kind of in the agreement that railroads, there's going to be some scrutiny on these things. I think they continue to climb. Here's the weekly. I mean, it's obviously in an upward trend. If you take pre-COVID and you say, okay, I'm going to take 3 spots pre-COVID and we're just going to trend that up, you can see how it's still in that upward trend, but has taken a fairly big turn to the right. So I think we have upside, but I'll look at Planet Fitness in a second. Let me just fill up my water bottle real quick. Oh, Mike, I just saw your email about MACD. I'm going to watch that video in a little bit. But yeah, there's UN. Let me look at Planet Fitness. In fact, I'm thinking about joining Planet Fitness. PLNT. And if we go over here, by the way, let's look at UNP. I mean, UNP is just a solid hold, buy, hold. Valuation is D. It's a little bit expensive. You see top 10 ideas for 2024. UNP is one, I'm sure. But Planet Fitness, I mean, this is just a historic run. The algorithm makes you 5% without including this current run. It got beaten down. I mean, it just got beaten down, and now you're looking at over 100 days of 58% increase. It's a solid I mean, it's a cash business. They just print cash. PLNT, Planet Fitness. You can see the PE's 44, forward PE of 29. I mean, this is, God. Okay, hold on. Safari settings, extensions. We're going to just put everything. Why not? Okay. $6 billion market cap, up over the last year, down 6%. Target price is 73. It's trading at 72. Probably has made its run here October. They say it's worth 45. You're trading at 72. So, 15 franchises to own in 2024. You can see interim CEO on December 11th bought at 68. Nothing huge. The director sold at 66. He sold 1 million shares for $66 million. He bought at 64, 10,000 shares back in June. He sold 1 million. Morning, Scott. Let's say I think Union Pacific is just one of those, Brian, that I think its valuation right now and shipping stuff, I think they had a huge uprise in shipping. But you saw, I mean, if we just look at the growth in the railroad business prior to the pandemic, you saw that weekly chart. That channel that I just drew, that's pre-pandemic, without the pandemic drop. And then, in the higher for longer world, it's kind of down. Me or Joe Rogan? I'd pick Joe Rogan. I'm not a Joe Rogan fan, but I'd pick Joe Rogan over me. Yeah, Christian with the Jones Act. I don't know what the Jones Act is. He had his shirt ripped off? I didn't know he had his shirt ripped off. Scott, Amazon, 20% of all online orders were Amazon. I think Amazon with their ad tier is going to kill it, specifically in an election year. God, I mean, just imagine. There's two things that Amazon will kill with their ad tier. First is some of these drop shipping companies will actually have an ad that will be specifically targeted. They will be willing to pay higher ad rates for a specific target on a show that you're watching where they can target to you specifically as somebody to buy. The click-through rate right on your TV, huge for Amazon. The second thing is that nobody's given up their Prime membership. So they're going to raise their Prime, charge probably this year. They won't expand their, and they're going to continue to cut costs. And AI is just going to continue to, add to AWS. AMD is just the one that you and I continue to just enjoy AMD. It's up 2% at 144. Just got an upgrade to 188. Planet Fitness is probably that's price. Remember, and I can use this analogy again, Brian. What your grandmother is cooking for Christmas dinner, whether it's meatloaf or turkey, that's priced into the market already, and it's January. Okay, I'm going to do this. We opened up Boeing 226, gaps down, huge gap down. Get ready. That 231, I think that's a long-term one right there. We will start at QQQ. And I'm going to open up these. Where'd we open up Qs at? We opened up Qs up. We opened at 398. We closed at 396, 398. For those of you with the weekend newsletter, the paid one, you know what a button hook is now. Haven't started a button hook. But your RSI buyers are showing up. Bollinger Bands. This is from, the note is from, I got to go down there and grab that note. Bollinger Bands cinched up. Kind of still on the way down. You're kind of going to probably, there's a gap up here at 405. Okay, I'm going to get started here. Let me just go from bottom up. Okay, we're going to look at that one. We're going to look at this one. Going to look at this one. We're going to look at this one. And we're going to look at this one. And then we're going to move into backpacking here. We're going to close that down. Okay, we got that. We got that. We got this. We got the Qs. Okay. Let me just make sure the dogs are taken care of. Wah, 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 wah. Oxy's down below 60 again. Make sure they're not going to wake me up. Okay, do you want to go under there? Okay, go see your friend. You want to see your friend? Okay, go see your friend. There we go. I don't want to hear either one of you for the next half hour. Wah, wah. Okay. No. Let me look at CIEN. I did not. Did somebody somebody write to me about that one? Let me see. If I've got it in the show already. No, I do not. Okay. CIEN. It has you in at 44. You've got confirmation. Sienna Corp. It's a little high up there. Doesn't mean it won't go higher. Look, it just, this is an earnings gap here. You kind of came under the 200-day. CIEN, let's see. Average target price 59. You're trading at 48. You got to 54. PE is a little bit high. Forward PE is not very high, so they're expected to grow, which is good news for the stock. Take it with a grain of salt, that price target. 5 stocks to watch today, Investors Business Daily. Let's see, CIEN. If it's in an article like this, it is probably a little bit of a retail hype. So let's see if it allows me in. Don't forget to buy. Best stocks to buy or watch: Nvidia, Snowflake, Spotify. It's not in here. Novo Nordisk, Mercado Libre. Why is this article listed under there? I don't know. I don't know why it's in there. Oh, Insider, he sold. He sold. They're all selling at 44. Not huge. I mean, they're selling enough to make it semi-interesting. Around 44. Do they know something? Or is it just year beginning, hey, I'm going to take some money out? Nothing excites me about it. So I don't know anything about it. The only thing I would say is you've got your confirmation. It's well above there. Your MACD is kind of sliding up. Your only indication that maybe it's run a little bit too much is your RSI is at 70. Hopefully that's good. Did the dogs answer? The dogs went under their blanket. Bros breaking out. Bros always break out, by the way. Bros. I know, Dutch brothers. SMCI is a great stock. I am telling you, SMCI is my pick. Yeah, it's up above 300 again. You're going to 350. You're only going to have to decide when it gets to 350, do I sell my entire lot or do I start to trim? The valuation is not crazy. So, John, I'm not that advanced to look for cup and handle and stuff like that. Your boy's dumb. I told this to everybody. I got like 4 or 5 emails this weekend. Can you help me? I'm like, dude, I'm dumb. I am just dumb. I am a guy. If you want the paid newsletter, there you go. There's the chart that was in the paid newsletter. I'm going to protect that a little bit for those folks. We're going to go to QQQ, and then I'm getting started, and I'm ignoring your messages for a little while. So I'm going to hit the record button right now. Into back in hacking episode, Apple Vision Pro. Here. Yeah. There we go. We'll put that in too. Okay. Good morning. It's January 8th, Monday, and I am getting started a little bit late. It's 9:41 right now. I've been looking. Everybody logged onto YouTube Live and was hitting me, hey, look at this stock. Hey, look at this stock. Love you guys. It does delay my getting started, but if you want me to look at a stock, if you're listening on Spotify, if you're listening later on YouTube, on the video, just comment below. Apple Podcast doesn't have a way for you to comment below, so you're going to need to find one of the social platforms, whether it be Facebook. I have a private Facebook group. I'm on X or Twitter, Vaz, Vase, whichever one you like, tomato. I'm on Instagram. I'm on YouTube. I have an email address that you can email. It's all at Linktree, linktr.ee/dailystockpick. But if you're listening on Spotify, if you're on YouTube, if you're on any of those platforms and you see a button down below, you can ask me to look at a stock. I'd be more than happy to. But it does delay me getting started. Now, as you know, I am a talker. And as a talker, I do podcasts. My buddy Steve Birdshooter Goodrich, Birdshooter is his trail name. I do N2 backpacking. It's the letter N, the number 2, and then backpacking. You can find it on every major podcasting. There's no video. We're going to do video probably this year. I am one of the guests on this podcast. I talk a lot on this podcast. We went over the news from 2023, including a dog that sat by his owner for 72 days, including phones that get lost in ditch toilets or hole toilets, pit toilets. There's a bunch of news stories that we kind of go over, little, fun takes. I am definitely the straight man of this group, the boring one. I don't know if he's included. I talked about his dog. His dog is in the room the entire time we're recording this podcast, and his dog has 4 testicles. So I said it looked like a Christmas tree with the ornaments kind of dangling down. So I don't know I'm pretty sure he cut that part out, but Yeah, I'm on that one. So check that out. I will include that in the newsletter. And speaking of the newsletter, super positive reviews this week on the paid newsletter. Confirmation MACD button hook algorithm. You guys hear me say this stuff all the time. I am developing a list of terms that I use, and I will be doing a series. And so this weekend, confirmation. What does it mean? MACD. Why do I use it? What is it? Where can you find more resources about it? Button hook. This is a term that I have. What does it mean? What is it? I show chart examples. An algorithm. I have my 4-hour algorithm. What is it? How do you use it in TrendSpider? I go over all of that on the paid newsletter. I'm starting a second section you can see down here, more education. The paid newsletter, some of the paid stuff has specific stock targets, and so it's a little bit less timely to go back on. The education section is going to be something you can go back to over and over again. This week I've got cross-ups, RSI, Bollinger Bands, leveraged ETF, PE, golden cross, death cross, divergence, a 4-hour time frame versus other time frames. Why did I pick 4 hours? Bollinger Bands, they're cinching up. What does that mean? So if you're interested, there's a free 7-day trial. You can find it at dailystockpick.substack.com or just link to it. Go to the link tree down below and you can see it right there on the 4th link down below. Where are we on the Qs? Well, we opened up a little bit higher. I think people are getting sick of the selling. You can see right here, we lost confirmation and the algo will most likely get you out. This note was written while this gap down was actually being created. So understand the algorithm is a guide. It's not an absolute. If you want to trade it as a bot, you can. For the Qs, you make 23.4% over 24 months. There are 24 positions, so you trade approximately once per month. Your average win is 6.4%. If you're going to trade it, I'd say trade TQQQ, but QQQ, solid one. If you want to run it as a bot in TrendSpider, you can. I use it as a guide. And so you're never going to time the top. You're never going to time the bottom. Look, the bottom was down here around 342. It got you in at 353. The top up here was at 413. It got you out somewhere around 400. So you want to play in that middle space, but this note, we've lost confirmation. The algo would most likely get you out. There's probably time to trim for short-term traders. Long-term, time to add when we gain confirmation back. The Bollinger Bands signaling that if you read last week's newsletter was about the Bollinger Bands, and on QQQ, you can see them cinching up. When they cinch up, it tells you that there's going to be a move in the stock, and it's going to be either up or down. So again, part of the paid newsletter is understanding that it's not just one tool in the toolbox. You don't build a house with a hammer. You build a house with a ton of tools. So you've got all these tools. Right now, the RSI is telling us that buyers have to show up. When it's down here in the 35, 34 range, they have to show up. Look at the last time the RSI was down here. We were at 353. The algorithm got you in, and the MACD crossed up, and you see it going up there. Well, the stock prices went up. Now that we're going down, you can see the RSI is going down, the MACD crossed down, the moving averages are moving down. So you have to use all of these tools in your toolbox to be able to understand this. The Qs, right now, we don't have confirmation. Again, that's explained in the paid newsletter, but we don't have confirmation. We may have confirmation later. Be patient. That's essentially what the market is telling us. If you want to know the secret to the 2024 investing cheat sheet, the left, the blue circle, Kramer hates it. The right is Pelosi bought calls. So you want to find that middle ground in 2024. This is just your cheat sheet. If you hear that Kramer hates it, buy it. If you hear Pelosi bought calls, you're going to buy it. So those are the two things. When they intersect, it is an absolute in this market. Let's talk about a stock, Apple. Apple unveils the US Vision Pro. This is the long-awaited Vision Pro. That is costing $3,500. I don't know anybody that's going to, in the market for this one other than tech YouTubers. But right now, Apple, $3,500. The readers will be, if you remember from the launch video, they have these glasses things that go into the glasses. It's $99 for the readers and $149 for prescription lenses, so that you don't have to wear your glasses when you're wearing these things. I think that's a little crazy, but there's already been several new announcements. CES is going on in Vegas right now, the Consumer Electronics Show. 3 new competitors have already been announced. The price between $600 and $1,000. So with Apple offering this for $3,500, Apple does it better than most in most products, in my opinion. That doesn't mean that they're going to own the market. Meta has been out there with their version of glasses before Christmas. They sold a bunch. It was the #1 app, like we talked about. If we look at the stock charts of this one, again, you can see button hook. This is the chart that I use to explain it. In the paid newsletter, you can see everything right there. If we look at Apple's chart, you're kind of seeing a button hook. And right around this 200-day. The 200 days at 182, I think that's providing you some support. If we continue to go down, the algorithm has not gotten you in. There is a gap here between 188 and 192. That will get filled. Absolutely will get filled at some point in time. Do I think that you buy right now? I'm not. The algorithm hasn't told me to get back in. We're down below the 9 days, so you don't have confirmation. Those Bollinger Bands, we're still on the low end of the Bollinger Band. If we look at a long term of this one, and I'm going to look at a weekly, and I'll move this volume lever back to where we were at the double top, right around here in, let's say, January 2022. If we look at this and we pull this a little bit forward, you can see. So what this tells you in TrendSpider is everybody who bought the stock from this point forward, where are they holding? And the large majority are still in the 170s, which means we may have some continued downward pressure. These people at 174, 175 may be saying, you know what? I've held it for over a year. I'm finally back in the positive after spending, almost a year and a half below negative. I'm finally going to sell. They may start to sell, which would cause some downward pressure on the stock. Right now, you're up 0.88%. So it's not really moving. You're providing on that 4-hour, when we look at it, the 4-hour 200-day is providing you some support. We haven't fully broken it. You can see each candle is kind of touching it. So it's providing you some support there. You did have this golden cross, the 50-day starting to move negative. Now, when the 50-day gets down to this 188 price, right now the 50 days at 192, I would feel a little bit better knowing that it was down there covering that gap and that we could probably move up to that gap. But I'm a little bit nervous about it. So am I selling? No. Am I buying? Not yet. Still don't think there's a reason to buy. Again, the Vision Pro, well established. It's not news that I think is going to go crazy. Nothing that I think is going to be nuts. I saw a quote from Steve Burns, and I'll put this in the newsletter as well. In trading, the magic isn't in the predictions when you're right. It's in the risk management when you're wrong. You guys know I sold SQQQ last week. I got a little bit nervous. Didn't want to hold it over the weekend. Triple levered ETFs, if you've listened for a long time, I don't like holding them over the weekend. We're seeing a little bit of a losing of confidence there. You're seeing the RSI super high back here at 62. You're seeing the MACD just around the oscillator. So the market's in one of these middle phases. Don't like to trade around those middle phases. I like to be a little bit patient. When the MACD is down here and it's crossing up, I probably would have bought here at 16 when the algorithm told me get in. You lost all this. This was the December-November run in SQQQ. And the RSI, everybody's just started selling it. Well, when they started selling it and the MACD crossed up again at 1336, that's what got me interested to buy. So I bought a little bit, made a little bit of profit, got out, saw it turning down a little bit. I'm still bullish on the market overall. But again, Steve has it right. It's not in the magic of the prediction when you're right. It's in the management of the risk when you find out that you're wrong. Hope and pray is not a strategy. So develop your strategy, understand your strategy, back test your strategy, and that's the benefit of TrendSpider. Earnings this week. Friday comes out with the big banks. We really, and this, by the way, was from Webull. I love Webull. The app is amazing. The desktop software, I really like it. Works so much more efficiently than my Active Trader Pro from Fidelity. But Webull's economic calendar said the top 3 companies that are reporting this week, JP Morgan, United Healthcare, and Bank of America. JP Morgan, I don't like to own this one just because the Epstein kind of link. I think Jamie Dimon knew what was going on with Epstein. I think he took his money anyway. Just kind of ethically, it's trading at all-time highs. Not one that I kind of look at and say, hey, they're going to blow it out of the water. Their previous earnings were $3.56 per share. They're expected to, that was from the previous year. They're expected to make $3.43. Nothing that tells me, oh my God, I've got to go out there and buy it. UNH, on the other hand, this is one that I've said, hey, under 500, you should buy it. The algorithm got you in here at 523. 500 may be just a hope and a prayer at this point. I don't expect it to. I expect them to have solid earnings. Their estimate is 598. Their previous was 534. If they hit that 598, yeah, you're down from 656, but they do blow it out of the water a little bit because their estimate, again, if they make 656, you're going to see the stock back up at close to $600. I mean, that's just the way this stock is going to run. Now, the algorithm, it loses you 3% versus buying and holding. You make 12%. It's got you in at 32 positions over 24 months. Your average win is 359. I'd rather see you buy this around the 200-day at 519 than buy it at 538 and see it come back to 519. I think this one long-term, I think it's a solid stock. It is a little bit expensive. If we go over here to FinViz, and I'm using FinViz right now just to kind of look at it because everybody has access to FinViz. We'll go over to Seeking Alpha in a little bit. But UNH right now, you can see the average target price 601. Even recently, December 18th, HSBC downgraded it. They're saying it's going to 480. They see significant downside. October, UBS upgraded them with a price target of 640. So that's a huge difference. Now, year to date, they're up 2%. Over 1 year, they're up 10%. You get a 1.32% dividend. If we look at insiders, they're selling. I mean, again, this dude, the director, sold 550 shares. That's $36 million, and he sold it at 550. I do think 550 is probably a top at this one. If you get back to 550, you're seeing a double top. So if we go over to Seeking Alpha, and we look at UNH, let's just see what the quant says. I bet it says hold. It's just a little bit too expensive for me. I haven't gotten back in. I did sell at that 550 price point. And we can see, let's see, quant says hold. I mean, Seeking Alpha analyst buy. Wall Street says buy. UNH preparing for Q4. You can view that if you're a Seeking Alpha person. Now, of the 10 in the industry, this is ranked 6th. Number 1, Centene Corporation. These are managed healthcare companies. In fact, my managed healthcare company, Oscar, which I'm a member this year, Oscar Health, OSCR, this one's been a monster. I mean, this one has just been an absolute monster. They're not making money. But over 1 year, you are up 250%. So, but I like Bank of America. Bank of America is in the core portfolio. I've liked this one under 30. I was telling everybody, pounding the table, buy this one under 30. It is now at 33. This one at 26. The algorithm makes you 19% versus buying and holding. This one loses you 28%. You're in 26 positions. Your average win is 8.41%. If we look at this run, and if you bought it just on the algorithm at 26, you're up 30% right now in 68 days. 68 days. Long term on this one, still like the stock. You're bumping up against that 200-day. If we look at where people are holding this, we pull this back to its highs, which was January 2022. You can see the majority of people are still holding this between 28 and 29. If we see a bad earnings this month, you're going to see them sell. I don't expect a bad earnings. I expect this 50-day to continue to move forward. I expect good earnings from them. Major economic news on Thursday, the 11th. I think it's Wednesday or Thursday, I forget. But it's the 11th. We get inflation. That is the year over year for December. You're going to see, that's going to tell us, hey, is March back on the table? So that all of that information, by the way, I am greeted every morning from Webull. There is a link down below in my link tree that you can sign up for Webull and get some free stocks. Join me. I put $1,000 in there of January of last year. Let's just see. I'm at $39.59. I'm sorry, $39.72. It's running right now. So $39.72, $3,972. Join me. Throw $1,000 in there. Get some free stocks. Boyle. I said it last week. 32% rose so far in the algorithm. If you read my paid newsletter, I'm seeing this one lost confirmation below that 9-day. Right now, it's down 10%. This is a decaying asset. It is not an investment in natural gas. This is a decaying asset. But even though it's a decaying asset, it is well below where it should be trading historically. If we look at just the channel, and you look at this one, November 2018, where it hit its high, and we just, kind of go pre-COVID. I mean, COVID just kind of lost this one. Even if we go down here and we look, you're well below where you probably should be. You're maybe even in the middle of where you should be. But that 200-day is just way too high. Boyle right now is down 10% at 31. In the algorithm, you lose 74%. It's not horrible because you lose 93% if you just bought and held. I wouldn't buy it right now. I just wanted to bring it up because KOLD KOLD has been such a winner. You lose, let's see, in the algorithm on KOLD, over 24 months, you make 13% versus losing 66% with just buy and hold. The algorithm just got you out of a 78% gain. You're seeing this one kind of button hook. You don't have confirmation. The algorithm has not said buy, but look at that MACD slide in this. Buyers are showing up on this just because, Boyle and natural gas has gone up. So, this is an interesting one. Boeing. Okay, before I say this, I do think you're gapping down. Boeing, I think under 230. I think you could add to it. I don't think you initially buy it right here. I think you wait. This right here at 230 is kind of the price point that I said, hey, this is where under this you probably want to buy it. It was under 200 for a while. I said, well, it's under 200. You absolutely should buy this one. The algorithm, this was just a historic run. I'm going to get rid of all of these. Let me remove this segment, and we're going to take a look at this run right here. If you got in with the algorithm on October 27th and you got up here, it got you out with a 36% gain, but you went all the way up to 48% before you started to dovetail. And you can see those Bollinger Bands. They were telling you something's going to happen. Didn't know a door would fly off. But, again, if you want to read the news, shares of Boeing and Spirit AeroSystems plunge after mid-air blowout. Essentially, a door blew off. Our resident expert, Joe, says, hey, Boeing quality issues. You should, look at this. Now, Spirit AeroSystems is a buy in Seeking Alpha. If we look at Boeing, because I do think, in my mind, I think Boeing is a buy here just based, it's a poorly run company. I mean, let's just be honest. It's not a very well-run company. They've been doing better. It's just, if you want to read an analyst of it, this is the analyst that I just read. He just released this today, a new explosive max and stock crisis. His conclusion is, hey, for the long term, Boeing's a buy. Do we want to buy it? Do we want to buy it here? I'd say wait. You've got this nice gap up here between two. It looks like it closed at 248 on Friday. So you're at 227. You get back to 248. You do. Look at the long term of this one. If we just look at a weekly, you're probably going to use that 200, probably the 50-day. I'd say 211. If you have continued downside, if they find more problems and the economy continues to slide a little bit, the market continues to slide and rates continue to go up, I think you see that start to go down. They just got a China order. I just think it's a solid one. Again, I wouldn't put it past it. Bitcoin ETF will happen this week. That is the big news. We've been saying that Bitcoin, I think it was January 11th, was the date for GBTC, and we're going to look at GBTC because this one had a cross up. It was interesting because I read in an article, and I didn't put it down. I just wrote a note. Bitcoin ETF, what happened this week, BlackRock is having a 0.3% management fee, while everyone else is having a 0.8. So BlackRock may be the one that actually wins out on this one with their ETF. That may be the one that you want to put into. GBTC right now, huge run. It is up 0.31%, just had another cross up. You're in the middle of that one. The one that I am looking at buying, which is the one that ARK is buying, is BITO. And BITO is up 1.36%. You can see the buy-in at 20. You're trading at 21.77 right now. The MACD is kind of in a normal place, not crazy high. Hasn't moved a ton. This will immediately go over to a spot Bitcoin ETF, where it's now a futures one. So you should see some upside on that one just from heightened, hey, we've got a Bitcoin ETF, a spot Bitcoin ETF, blah, blah, blah. Whatever. But social request, Orlando wants me to look at Crocs. And what's interesting about Crocs is I was looking at this article, 4 stocks to watch on Monday. Boeing was one, obviously, with that door blowing off. The second one was Crocs, rallied 9% in pre-market after the footwear maker bumped up its full-year guidance, which also came in above expectations. Ahead of a presentation at the ICR conference in Orlando, Crocs said it sees a record 2023 revenue of $3.95 billion above a prior range of 3.91 to 3.94. So they're going to see 3.95. It's up. CROX is the symbol. I would never wear a pair of Crocs. Perfectly honest, this is not a stock that I would ever put money into. I look at people who wear Crocs and say, what the F is wrong with you? I don't like them. Don't think they look good at all. They remind me of rain dancing with clogs. I guess that's what it is. I just don't like it. Is it a stock that I'm going to buy? No. It's up 17% today. So ignore me. Just ignore me. The algorithm loses you 8.2% versus losing 31.9% if you bought and held 2 years ago. It has been a slider. This has not been a good stock whatsoever for the last year. Even during that November run, we just saw it kind of, it bumped up a little bit, not much. You can see from here, 85. It's a 20% gain. That was nothing in the months of November and December. That was an average, probably. But Crocs, you're right up against that 200-day. I mean, it's at 101. From a FinViz standpoint, if we look at Crocs, most of this is probably unrelated because they just did up their guidance. The PE is 9, forward PE of 8. You're seeing no dividend. It's up 6% this year. Over 1 year, it's down 9%. Average target price, 122. If we look at this one, December 11th was the last one. They say 128. They're seeing a bunch of upgrades. What you're seeing is, though, they're selling. I mean, the chief digital officer just sold 3,000 shares at 110. He knows what's up. President sold 7,000 shares at 103. So I think you're looking at probably a top side, and these guys may know it. It's gapping up there. So it's trading right now at 102, 101. I'd probably stay away from it. Just me personally. Bisco from Spotify says, there's a couple of terms I'd love to hear you explain a bit more. If you have some time, you mentioned confirmation was the biggest one in terms of what you're looking at. Button hook was the other. Well, you know what? Bisco, sign up for a free 7-day trial at dailystockpick.substack.com. Because, I go over both of those in this first one. I've got 7 more. I explain them pretty much. Here's the way I look at the newsletter. It's $120 for a year. Now, what does that $120 get you? It gets you probably, I'm going to do at least 50, if not 52 paid newsletters. I typically do them on the weekend. Even if you don't want to pay for the newsletter, you can get a free 7-day trial of it, or just get the free daily ones. I guarantee you, if you listen to my podcast, 5, 6, 7 days a week. The only reason to pay for the paid one is probably more a situation was, oh, I want to hear more of what he has to say, or I want to hear a specific of what he has to say. But through osmosis, I have that magic. It's osmosis. My words will get absorbed by you, and you will magically, through the miracle of podcasting, you will understand what confirmation is. You will understand what the button hook is. So I would say, yeah, I'd go over it a little bit more, but let me protect those paid subscribers. I'll go over it later, but it's in here all the time. Shane from Spotify asked me to look at Verizon. Verizon's an interesting one. I do have, just so you're aware, here on the link tree, the fifth one down here is Visible. Visible is through Verizon. You will get $20 off your first month if you click that link. Now, what are your plans on Visible? And I bring this up because Visible is owned by Verizon. It is Verizon's service. Now, what do you get? Well, your first 24 months, by the way, are $20. That means you save $20 on your first bill, according to this, and you get $20 for 24 months. So your first month is essentially free if you sign up through that link. If you don't want deprioritized data, I am on this $20 a month plan. I pay $25 a month, but I'm on that deprioritized plan. If you don't want deprioritized data, $35 a month. That is the same thing as Verizon. I think you get up to 50, 60, 80 gigs or something of prioritized data before you get deprioritized. But this is Verizon. And this is why I haven't liked investing in Verizon. Now, the algorithm makes you 5% versus losing 25% with buying and holding over 2 years. It gets you into 28 positions, so it's a little bit of a trader where it's a little bit more. You're in at 37, you're trading at 39. Long term, the problem with Verizon has been over this period, and this you're seeing a negative 200 day, a negative 50 day on this weekly. You're just seeing the rebound right now. It's a little bit overbought. You can see the RSI up here at 63. Doesn't mean that it won't continue to go up. It's obviously got confirmation over that 9 day. These Bollinger Bands are wide open. You saw them, they cinched up here. It provided you a nice little increase right here. I think you're looking at 45 as the top. This business is just a capital intensive business. They're starting to see the benefits of it. You can now get Verizon wireless service at your house. So if you don't have Fios wired into your house and you're a light internet user, they'll sell you this. You can use your phone as a hotspot if you want to. Creating your own in-house network for $35 a month through Visible. I do that a lot when I'm traveling on the road. I just use a hotspot. Average target price is 41. I just think the upside is limited. These guys in January 4th, Wolf Research upped it to 46. January 3rd, KeyBank upped it to 45. So you may still have some run. Here's the good news. If you buy this and it backs down to like 35, the good news is you've still got a huge dividend that they have continued to pay. The PE is super, super low, but it's a capital intensive business. I have not liked phone businesses. In fact, if we look at Verizon from even a monthly, a long term, you're trading at levels you saw in 2011. And that's how capital intensive. The phone services have been a race to the bottom. You don't want to be invested in a business that doesn't have pricing power. And right now, Verizon doesn't have the pricing power to be able to justify $80, $90, $110 per line for wireless mobile service, or $60, $80, $90 per month for home internet service. So that's where Verizon kind of comes into play. Remember, I was a cable executive in the early 2000s, and Wall Street just doesn't value the cash business of these businesses. They just don't, and that's just the way it is. Brandon from Facebook, can you check out SIDU? I'm on a space kick. They just had a huge 100-for-1 reverse split. It's never good 100-for-1. Woman founder, CEO, veteran Navy pilot, kudos. They 3D print satellites with and produce full stack tech in-house. Launch dates with SpaceX and licenses just granted from low orbit. Man, Brandon gets us into these wacky ones. SIDU. If you're younger, I will say this. If you are younger, you should be taking risks like this, not throwing a bunch, but maybe 5% of your portfolio should be in things like Bitcoin or moonshots, kind of like this. You can trade them at 5% of your portfolio. Don't have it add up to be, 50% of your portfolio are moonshots. You just don't want something like that. You want moonshots to be a very small portion of your portfolio. SIDU, we got a cross up here at 411. You're at $13 right now. God, you wish you would have listened to the algorithm and bought it at 411 because you're up 217%. Over 24 months, the algorithm loses you 81%. You lose 98%. If you look at this, remember, I talked about capital-intensive businesses. Space is a capital-intensive business. Look at the volume just on this. This is some type of retail hype. Don't want to say that it won't get back to its 50-day at 26 and double, but I would be slightly concerned because if we look at let's look back here, June 13th. June 13th, nobody's holding at these upper levels. So there's no real price that's being pulled up here. Now you do have this 49 million shares are between $3 and $34, but nobody's holding up here. So everybody at this 133, 134, they all got out. And that reverse split, 1 for 100. I mean, this was just crazy valuation. Crazy valuation. So I'd probably look at it. I mean, SIDU, Brandon's smart enough to know. He's probably gone over here. It's a $1 billion market cap, not huge. 69 million shares floating. They don't list how many shares are outstanding. They're probably going to dilute you at some point because they only have 2 cents per share. So in my mind, I think this one, I have my moonshot in IONQ. I have some in TQQQ. As I get older, my portfolio becomes a little bit less, hey, let's go for the moonshot. That's just kind of good portfolio management. I don't know what brought you into this one. I do like that it's a female founder. It looks like the CEO bought 500 shares on May 17th at a value of $115,000. That's probably a good amount of her money. So they are going to dilute, though. They do need money. That's just what I see is that they need money. The price of sales at 148. They just don't have their income. They lose 15 million. They made 6 million in sales. So they're losing 15 million. They've made 6 million in sales. I just don't know. Their book value is 10. You're trading at 12. Doesn't get me as excited as IONQ. IndaQ, MLGO from Spotify. He wants me to look at Spotify. Or I'm sorry, microallergy. This looks like a SPAC or something. Traded at 87. The algorithm doesn't work. Loses you 96%. Loses 91% buying and holding. MLGO. Let's look at. There's no way they're making money. Yeah. They got a market cap of 4.74 million. They only have 0.38 million shares. Good luck in this is a China. So it's a China software. Good luck filling that order. There's no news on this. There's nothing. I can't look at it. I mean, it's just got nothing. There's nothing to this. I don't know why you would want to trade this one at all. You can look at the node. Developed a more secure foundation for Bitcoin and other cryptocurrencies. Operates as a holding company which engages in development and application of bespoke central processing algorithms. Its services include algorithm optimization. The company was founded May 14th, headquartered in New York. I don't know why it's listed as China, but there's not much on it. It doesn't have an exchange, and they have very few shares outstanding. So I'd be very careful of it. Don't want to say don't buy it, don't trade it. If you know something else, there's just no information on it. So they're not making money though. It is a significantly that if you want a moonshot, that's a moonshot. If it were trading for 1 cent and you tell me it'd go to 2 cents, probably believe that one. But it's to 87 cents. I would not put a large amount of money into that. Dex wants me to look at Zim. Zim is an Israeli trade shipping company. This was big during the pandemic because shipping rates and with the pandemic stuff, shipping companies were able to name a price and people were paying it. That's what you're seeing today as well, specifically with Zim, because Zim is one that operates in the Red Sea. And the Red Sea, if you don't go through the Red Sea, you've got to go around the Red Sea, which adds significant stuff. You can see in 22 days, this was 100% gain. Now, you've turned back a little bit. You're down 12% today. There was an interesting article in Seeking Alpha, and it's an analysis. In an irony of fate, Israeli-based company Zim appears to be among the greatest beneficiaries of ongoing disruptions in the Red Sea. If we go down here, the conclusion, risk factors. Bottom line, a surprise twist of fate, the Houthis appear to have addressed worldwide container overcapacity single-handedly, with Israeli-based liner company Zim being a prime beneficiary of the ongoing Houthi attacks on merchant vessels in the Red Sea with container freight. As a result, I'm upgrading the shares from hold to speculative buy. Now, right now, Zim ratings in Seeking Alpha, hold, sell, and hold. So, again, it's down 12%. If you can put up with the volatility of this one, I'd say trade it. From a valuation perspective, I don't think that it's worth it. They're losing money. They're not making money. But if you can put up with the volatility and trade this one, I don't think it's a horrible one to trade. You can see if we run it in the algorithm loses you money, so you have to be extremely vigilant on this one in order to make money on it. So I like it, but I don't like it. Salpy Mindtag from Spotify, EC, and you mentioned a lot of terms cinching up. Could you please explain the term cinch up? Bollinger Band's contracting. It's the same thing, cinch up. So if you just Google Bollinger Band, you'll see what the term contracting, cinching up kind of does. I'm not going to do it any justification by explaining it. It will be in a paid newsletter with some links to that stuff. Ectropotol SA. I don't know what they do. Looks like the algorithm loses you 25% versus buying and holding loses you 3%. 30 positions over 24 months, your average win is 6.43. So it's not a great one to trade. You can kind of see it's in an upward trend here if we look from a weekly standpoint on EC. Just kind of getting back to its 200-day. You have a gap up here at 1366, probably something that maybe gets filled, but it does look like it was an earnings gap down. Maybe they're kind of addressing it in their earnings. I don't know. Let's see what FinViz has it as the valuation EC. It's oil and gas in Colombia. PE is 5, $25 billion market cap. It is up 2% year to date, 24% in a year, which is actually really, really good. Dividend is 17.57%. That's huge if they can keep it up. Let's see. Let's look at it because Seeking Alpha actually puts in the forward dividend date and how safe it is, because sometimes, it goes ex-dividend tomorrow on December 18th. Let's see their dividend. Warning EC, risk of cutting their dividend. Dividend safety, F. That's what you have to worry about. Forward dividend of 26%. Annual dividend payout is $3.30. Stock is currently trading at 12. There is no way a business can continue unless they are growing incredibly. And the problem is that even if they're growing incredibly, the last dividend announcement was 83 cents on 12/19. They don't have anything going forward, but the dividend safety is an F. I mean, that's what Seeking Alpha kind of tells you is, hey, Seeking Alpha analyst said, learn why, if you want to know why. Etro has displayed warning signs that have historically led to dividend cuts. The company has a dividend safety score of F. Over the past 11 years, 64% of stocks with an F rating did cut their dividend. Does this mean that you should sell the stock? No, not necessarily. It just means that you should be careful about relying on the dividend for your income. So if you're buying this for the dividend, and remember what I say, dividends are made for income. So if you are Walter sitting in your rocking chair in the old folks' home, in a managed services care facility, I should be a little bit more politically correct. If you're sitting there and you need income because you have to buy your sticks, whatever, your pretzel sticks. If you are that kind of person and you need income, that's the person who should be investing in this. If you don't need income, there's no real reason to invest in this. MPLX is a perfect example. This is in the core portfolio. This has an 8% dividend. This was a 30% dividend when I first bought it during the pandemic, but it's now 8% yielding. Over the past year, it's up 12%. Year to date, it's up 0.76. This has held up incredibly well. I'd rather have a company that is willing to pay the dividend than somebody who is at danger of cutting that dividend. And somebody with a 17% dividend is at danger. And I took that chance with MPLX. Understand, I took that chance with MPLX. But their dividend right now is not at a chance of being cut. So I like MPLX if you're looking at an energy company for a dividend. That's my thing. Steve from Facebook. Hi, can you look at Yeti and give me your opinion? Let's look at Yeti. Yeti, for those of you that may not be campers or boaters, these are the folks that make those cool coolers that keep things incredibly cold or incredibly warm, whatever you want. I think that's what they mainly do. But Yeti, right now, the algorithm has you out with a 9% gain. This was a crazy one because you could have gotten out with a crazy good gain of 25%. And it's just, look, button hook. Look, Bollinger Bands. Look, losing confirmation. Bollinger Bands cinching up or contracting. Look, the 200-day. You had the golden cross. Was it going to go up or down? Well, look at that. The RSI was up here at 86. Look. I mean, every tool that you have in your toolbox said this is going to go down. Now, the algorithm loses you 64%. It loses you double versus buying and holding. So this stock is one that has just hit the 200-day, and it's rejected off that 200-day. Looks like it doesn't have a long history here in the market. So let's see. Let's pull it back to where, looks like it IPO'd back here in December 18. If we go to the highs, let's see where everybody's holding it. Was the hype worthwhile? Back here in August 2021, look, nobody's holding at a higher level. Everybody's holding at a lower level. So if you go back here to the, let's just go back to before COVID. Where's everybody holding? Right in this area. So your target is really between 37 and 47. Would I buy it now? Probably not. It just doesn't make sense that if other people aren't buying it at that high rate, why would I? Average target price is 47. You're trading at 46. Let's see. The market cap is $4 billion. They are making money. Their PE is 63. Their forward PE is 17. So they have to continue to grow to justify that PE. Most recently, downgrade. They downgraded it to 50. 52-week range, you got all the way up to 54. So let's look at insiders. The only thing, August 30th, sale. CFO sold, but he only sold $118,000 worth. Nothing huge. Doesn't excite me. Let's look at Seeking Alpha real quick. I don't use Yeti. Don't have a Yeti cooler. I think I have a couple of Yeti cups. Nothing that I, am like, oh my God, I've got to buy it. Valuation is D-. That's what it is. The valuation is what's killing this one. It's all valuation based. So, right now it's ranked 5 of 27 in their industry. So Seeking Alpha is messing up a little bit. It's kind of hung up. But yeah, Matilda from Instagram. Can you look at CrowdStrike and Melly? Crowd is one that I had in my portfolio. I sold out of. I may have made a mistake. Not quite 100% sure if I made a mistake. But here, Crowd, I sold out. Nice 32% gain. It's back up to 258. I think it's a $300 stock. You can see the MACD is going down. Here's what I see in this chart. I see, look at and these three things are in particular. Look at this stock price right here. Look at this stock price right here. And look at this stock price right here, because the best predictor of future is the past. So these two in particular, you can see a big run up in the RSI and the MACD, and then a huge downturn. Well, it kind of just pulled back a little bit. We saw what? A 6% pullback. Here, you saw the same thing, big MACD, big RSI. You saw a nice 6% pullback. Big MACD move, big RSI. Here, you see a 5% pullback. Start to add to it. Again, I think anything around 240 to 250, I'm going to start adding. I sold at 247. I sold with a gain from last year. So I started buying at about 180. Way back here, and I think I started adding to it about 154. I held on to this for long term. I like CrowdStrike. CrowdStrike from a go forward plan, just start adding to it. Cybersecurity is one. They're going to need to spend it. It is expensive. I'm not even going to go through the valuation because it will freak you out. Just start adding to it between 240 and 250. That's my guess on that one. Melly, I've gone over this one before. I like Amazon better. This is the Amazon of South America and Latin America, I should say. It's one that, hey, you can't argue. The algorithm makes you 35%. Buying and holding makes you 35%. It's one that you probably just want to hold according to a lot of analysts. If we just look at a weekly, I kind of drew this chart, this channel before. You can see we're still down at the bottom of that channel. I think we continue to move up in that channel. So I think you're fine on this one. If we go over here to FinViz and we look at Melly, Mercado Libre, its PE is 80. You know, again, the PE is huge. If we look at Amazon, the PE is 77. I think you're getting Amazon at a cheaper price than Melly, and you're getting Amazon Web Services. Melly is just one that's going to continue to grow. I think it's fine. If performance over 1 year, you're up 82%. Average target price is $18.23. You're trading at $1,500. I think you're fine on that one. Either Crowd and Melly, I think you're fine in those two. You just have to understand you're buying fairly expensive stocks. That's essentially it. Scott from Spotify asked me to look at Trading Desk, and I love Trading Desk. And one of the reasons I love Trading Desk is because they basically place the ads on streaming services. Now, the problem that you have is everybody's in this business now. So they're going to be a super expensive stock because they were expected to grow. They've been pulling back. You're going to see on a long-term basis, this is a pullback stock. Now, my algorithm loses you 47% on this. You lose 13% by buying and holding. It is a stock that just kind of stays here, so you do want to trade it. The 200-day provides support at about $55. The valuation is very high. You have to be cautious. This was what I put in prior to probably somebody asking me around here. Now, if you had bought back here, when you had the 50-day kind of touching the 200-day, you had a nice 50% gain. Conservatively, you could have made 50%. You're down below that 9-day, so you don't have confirmation. That 200 days down at 63, you're trading at 68. If we go over here to FinViz and we look, the Trading Desk, average target price is 78. 52-week range is between 41 and 91. You're 25% below that $91 price, but you're trading at $68. Your performance year to date, you're down 5%. Performance over 1 year, you're up 60%. The PE is 224. Understand, the forward PE is 50. So it's still expensive. That's the problem that you have with this. The most recent HSBC said buy. They didn't give a price target. November, New Street said sell to neutral. That's an upgrade. No price target. Loop Capital in October said buy at $95. It's at 68. I think it's a good one. I'd say buy Amazon. Amazon, in my mind, is just a better buy. So let's look at scans now. UCO. We talked about the Red Sea. Oil should be going up. It is not. It's going down. UCO is down 7% today. No confirmation. Be careful. It's got you down below its 9-day. I wouldn't buy it here. SCO, am I buying SCO? No, because we've had quite a run in SCO. SCO, the buy-in, it was at 20.35. I wouldn't trade. You're uncertain. People are not buying oil because they've been burned on oil before. With all of this political drama going on, they've just been burned. BITO got a cross up and GBTC got a cross up. We went over those already. Tractor Supply Company. This is a one that was growing during the pandemic. It's kind of pulled back a little from your long term. It's not one that I would say, hey, you've got to get into. But if you shop at Tractor Supply, maybe you want to think about it. So Tractor Supply. One that was interesting that came up, and the final one is Paychex. And this is one that has a gap down on earnings just recently in December. They gapped down big. They went from 127 down to 122, which is a big move on this stock. You're down at 118. You're trading at 117. It's down 0.31. You're kind of just below this 200-day. The 50 days kind of moving negative a little bit. The MACD, look at that move in the MACD. And look at how the RSI, sellers were just selling this since December 20th. So nobody's really shown up to buy. It hasn't seen a strong move up. I would wait for confirmation above 118 to actually buy this one. It is expensive. It is super expensive. And my note says MACD's in good shape with the RSI still low. It's expensive. I mean, the P's 26. Do you have justification to buy this double top? The double top was at 127. That's probably a resistance level. So your target price is 120. If you're buying at 117, your target price is 120. You have to expect this one to move. Now on December 22nd, they came at TD Cowen downgraded with a price target of 123. December 14th, Barclays downgraded it. They upgraded it with a price of 126. So if you're buying at 117, you have to understand that 120, 127, 128, 127, that's your top. That's your upside. Not sure there's a huge upside on this one, but if we go down here and we look, people are selling at 119. There's David Flashin. He exercised options. He sold $1 million. Look in October, people are selling at 115. Look in August, the senior VP selling at 125, and it's not small. These are $1 million sales. The biggest one came in July where somebody sold $132,000 at 120. I think your upside is at that 120. So understand, yes, this looks like a great opportunity from a chart perspective because that MACD has moved down so much, but the stock hasn't completely crashed down here below the 200-day. It's just kind of hovering around there. Does have an upside to it, but understand that when you start to fill this gap, that is the time when you want to take profits. And that's my take on Paychex. So if you have any questions, hit me up. Here's the link tree. If you want to sign up for TrendSpider, sign up for TrendSpider. Seeking Alpha, there's a $50 coupon on that one. I like that one. We've gone over this one before. Where did I get it? Oh, I was looking up Yeti on Seeking Alpha. Go to start page. All up system brace. Seeking Alpha, the premium. I get this every now. I think it's because I use Safari instead of Chrome. I think it winds up working on Chrome. But you can get $50 off if you click this link. Webull, like I said, I put $1,000 in there. Throw in $1,000 into Webull. It's so much fun to trade on that app. It's taking place of my sports betting. Daily Stock Pick newsletter, Substack. Like I said, the paid newsletter this weekend. I will continue this kind of stuff. I like this completely. SMCI, yeah. Scott's telling me about SMCI. This has been my pick. I've been pounding the table on SMCI. For anybody that didn't buy SMCI at 250 when I was pounding the table, or 260 when the algorithm told you, or 265, it's now at 315. It's filling this gap up to 350. Simple, you're seeing 300 has been the resistance point. You're finally getting it a little bit higher. The Bollinger Bands are cinching up. They're contracting. You're seeing confirmation above that 9-day. You're seeing the MACD cross up right here, right at the oscillator. It's a little bit oversold. I wouldn't worry about it. The valuation on that one's just good. So, okay, I will talk to you guys tomorrow. Take care. Bye. Lucas, my big fan. Let's see. IONQ, yes. Hit the like button. So Christian, I have semi and insider track with Fidelity. I use Mac, and they basically do a Windows shell on Mac, and it's horrible. It just causes problems on Active Trader Pro. Their app is horrific. They have a Reddit that they actually listen to, Fidelity Reddit. So it's /Fidelity. Fidelity has a customer service at Fidelity Investments. Let's see. Hold on. Fidelity. Let's see. There we go. I think this is where you can complain about the app, under this Fidelity Investments subreddit. So I think it's this one. I don't know. What Fidelity told me. So after Robinhood, the Robinhood GameStop debacle, Fidelity saw an influx of about 2 million users within about a 3-week time period. People started moving their money and moving. It was smaller accounts. It wasn't big accounts. It was smaller accounts. And so they hired a dev team to just look at Reddit and to not necessarily model against, Robinhood, but to look at Reddit and to try and create an app. Supposedly that dev team is still there. I talked to them a few months ago, not the dev team, but to my contact, and they still look at it. But it's crap. They don't even give you, I can tell you, the one thing I complain about, Christian, is the year-to-date total. They don't give you on the app. They used to give a month-to-date, 1 year, and it was dollars. Now they just give you the charts, and it's crap. And then you look at the Watch app, and the Watch app gives you the dollars and stuff. So I'm like, why can't you take it from the Watch and put it on the phone? Oh, yeah, we have some problems with people. Whatever. Gary Dumb. BITO, BITX. BITX has been Joe's favorite. They were working, TrendSpider was working on their mobile app, and I heard it was getting significantly better. So I have to try. I have it on my phone. I just never use it. I use the Webull app. The Webull app is amazing. I got the magic. IONQ. Brandon has been right on about IONQ. I only own, 10 shares? 15 shares? Somewhere in that neighborhood. It's not a lot. Algorithm got you out with a 24% gain. I should have gotten out around 14. It's now at 12. I'll just buy more. I hold it. I probably have to add it in my Fidelity account because I have no money in my freaking Webull account. I've been adding so much SMCI SQQQ and stuff. I just have no money in my Webull account. I have $3.22 in cash. I am 100% invested in Webull. So, to the moon. October. Hey, Butch. Yeah, I say buy. Joe says don't touch it. Boeing, I say buy. Joe says don't touch it. So do with that what you want. I think 230 is the cross point. I think under 230. I drew that line, and I drew that line well before this. That was kind of, see how you've got this nice, that's where that line comes in, 230. Above this, I said you should probably sell it. Until it justifies itself, probably sell it. Bollinger Bands are moving up. I think that, this was just, listen, I'm not smart. I just got lucky. Amazon's total buy. Lucas is my number one fan. Amazon under 150. I just, listen, I've said it before. Look at that. You still have 25% up to that. That was on a weekly. If I look at a weekly, you'll see the chart that I put in there. It's above its 200-day. You saw it cinching up, contracting, whatever you want. And it's got it above it. Let's start adding to it. On is a $35 stock. It's trading at 28. It's a 35. I mean, look at that gap. It's a $35 stock. If you want to invest in it, it's a $35 stock. The valuation is crazy. Nike kind of, look, they made 4 cents and then they made 23 cents. Didn't take off. Algorithm has you out right now. Algorithm makes you 11% versus losing 19%, 28 positions. The problem is that, you're going to get in. I probably should add this to my not owned. Let me just make sure. Yeah, it is in my not owned. So we're going to have a buy in the algorithm tomorrow at 28.76. You're probably going to get in at 29, but it's a $35 stock, D-man. Yeah, I think your target there, Joe, is probably right. I think 230, I think you start adding to it, but I think you start adding to it in small quantities, 10%, 10% a week. So if you want $1,000, buy $100 of it this week. As it starts to slide and the investigation continues, I think you can still buy it down there. But take a look. I mean, this is what's interesting. If we just go back to this weekly, and we take a look at this. We go back to pre-pandemic and we look 2018. You know what? Let's take the highs of 2019. That was where you started to see it around 431. And so everybody who's bought the stock and is still holding from that 431, where are they holding at? It's between 200 and 230. You have to create new price, bars to get up to that space. Look, I mean, the majority of people are between 176 and 188. As you start to get these investigations, you start to see people, oh shit, I better sell. So you did have a golden cross. The Bollinger Bands are high. You haven't completely lost your confirmation under the 9-day, but it's turning over a little bit. This week, if you take a look at it, and we just expand this, let's expand this out. Let's expand that out. We'll bring that back down. There's your 9-day. This week, you've lost your confirmation. You've button hooked a little bit on the weekly. So you're going to see those Bollinger Bands start to come in. Where are they going to come in? 205 to 217. I think you're going to see this one just be a better opportunity. So, yeah. Fidelity, I am a high net worth individual, so I do have some pull over there. Not a lot, but I've pulled enough millionaires into Fidelity that they listen to me. And I've just told them, I said, your boomer audience loves it. Your actual future millionaires hate it and won't come to you. That's why Charles Schwab bought TD Ameritrade, and they're going to turn that stuff around for future traders. So, okay, I'm out of here. I'm going to hit the thumbs up button because I didn't hit it. I am out of here. I will see you guys tomorrow.